Hey everybody, Economic Ninja here. I got a great story out of the hedge we're going to go over right now, and it is going to prove to you that the banks are in utter collapse. The banks are hemorrhaging right now money because they are paying their employees their leases on their buildings and so on and so forth. They're literally, money is going out the door and it's not coming in. Why? Because they're one of their biggest money makers right now, actually two of them, factoring, because there's less goods being sold right now. So they're not able to make as many factoring loans, but their second biggest is mortgages. They can't make those mortgages. And that, because interest rates and inflation is rising, so interest rates are going up, mortgages rates are going up, people have stopped taking out loans for their new homes or to fix up their home. They are hemorrhaging money right now. And this is the proof. It says right here, Morgan Stanley, the latest bank to slash bonuses. Asian bankers could see 50% cuts. Now, a lot of you would say, well, no, this is bonuses. But the point being is that that's the low-hanging fruit, the end of the year bonus. They start to take that away because they need the money to keep operations going forward. It says Morgan Stanley is the latest in a long line of investment banks that are paring back on bonuses this holiday season. The bank's Asia banker bonuses could be cut by as much as 50%, a new report from Reuters said this morning. The conservative tone towards the end of the year paydays for bankers this year stands at stark odds with the record bonus paydays banks were distributing at the end of 2021. As rates have risen, deal making has slowed significantly. However, according to Reuters, discussions about bonuses are currently underway at the company globally. This means that the US European arms of the bank could follow Asia's lead in cutting bonuses. Now, let me explain that. A bank, a predominantly US-based bank, is starting to cut these outlying areas because what they're going to start doing as a company is they're starting to retract back to their country of origin. I want you to understand that. They start to close operations, their outlying operations, that first off aren't as profitable and do not have the government backing. So I'll give you an example. If Morgan Stanley started cutting the US side, right, where their protection is because they want to go to daddy government when they fail, and they're going to fail, and ask for a bailout, think about what the government's going to go. So you cut all the bonuses over here in the country you're asking for the bailout in, but you kept them going on in our competition in Asia and Europe. All right. So what they're doing is they're slowly pulling back the funds. Later, what they're going to do is start to close branches in other countries and again regress. Very similar to what happened to the Great Britain when it was just hammered in the world wars, and they had to start regressing and pulling back, closing bases and pulling back to their country of origin because they couldn't survive financially and militarily in the outlying areas. They come back. So that's what businesses are doing right now, okay? It says the slashing of bonuses means that overall compensation for bankers in Asia could drop by a stunning average of 30%, not a static job security anyone is looking for in an environment where CPI is at 8%. Now, people would think, hey, slashing your bonus by 30%, that's nothing. But a lot of people have built up their lives in the banking industry based on those bonuses. It's almost guaranteed until you hit a recession. It's funny. A lot of people in the banking industry are young. They have not lived through, they honestly have not lived through just the recession of 2008. To them, that's long gone. That was in the history books to them, literally. And so they don't understand that this gets pulled back. The guys in the banking system, and let me know if you're in the comment section and you've lived through 08, you're like, hey, I've been here before. As a matter of fact, I'm hunkering down right now. Let me know if you're in the banking industry, in finance, and you're hunkering down right now because you see the writing on the wall. You could read the tea leaves. It says right here, Jefferies chief executive Rich Handler and President Brian Friedman penned a memo that went out to employees last week. And it's a different financial institution, claiming that due to the bank's aggressive hiring over the last 3 years, in combination with slumping deals, that bonuses would come in lighter than normal. So you see, it's not just Morgan Stanley. I want people to understand that. They are pulling back, but they have that fine line. They go, we don't want to lose key employees, key people that are crushing it for us to another bank because they're still paying their bonuses or they're not, clamping down harder. So they have a fine line of losing a bunch of employees. But what they're doing is they're all watching each other, and trust me, they all have meetings together. They all know each other. They've all worked together. And they're going, all right, we're all going to do this together. And so they're going to start to lower bonuses or take them away completely. And you're going to see people starting to freak out. And again, when you have the higher earners making less money, that's less money going into the real economy, only exacerbating the problem. Guys, this is really happening. The banks are collapsing, but they don't happen overnight. Lehman didn't happen overnight. I heard the rumors on the street in June of 2008, and they weren't closing their doors until mid to the end of September of 2008. The point being is the ripple was already set. Bear Stearns had already shut their doors in the spring of 2008. It led to Lehman Brothers. And right now you're seeing financial institutions come crashing down. The FTX scandal with the crypto is only the beginning of it. It is going to ripple through the banks, and that is going to be evident in quarter 1 of 2023 when banks earnings come out and you start to see these massive write-downs. As a matter of fact, you're going to see it in January of 2023 because you're going to see what happened in quarter 4 of 2022. All right, guys, that being said, I thank you so much for watching. Get ready, guys, be prepared so that you're not scared and you're ready to go crush it and buy things, assets, pennies on the dollar during this next crash. All right, guys, the Economic Ninja is out.